Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. The market is freaking out that Alphabet may lose its dominant position in search as Microsoft invests tens of billions of dollars in OpenAI and building out its AI capabilities. I'm recording this on Wednesday, February 8th, and Microsoft launched a product with OpenAI yesterday. It's in kind of a beta phase right now with limited access. But this could be a artificial intelligence powered search tool that will give you answers to questions. It can even pull in recent data from news events or things like earnings reports. And the market is really reacting pretty violently to this. Alphabet stock is down 8% as I'm recording this, and there's a lot of fear that the cash cow that is the search business is going to come under a lot of pressure. Now, that's an easy reaction to have to something like this. But I think this could actually present a great buying opportunity for a company like Alphabet. So let's get into exactly what's going on and what this means for investors. I'm Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube and share this video with anybody who would be interested in this topic of AI in search. So let's talk first about what Microsoft introduced. This here is a blog post from Microsoft that's announcing a new AI-powered Microsoft Bing and Edge browser. What they're dubbing this as is your co-pilot for the web. And I think that's a pretty good representation of what artificial intelligence could do for people as they're using the internet and other digital devices. So here's what they're actually doing with this product. They're making Bing better. You might remember Bing is the search engine that Microsoft has never been very successful, really failed to kind of get off the ground versus a product like Google. There's something of a network effect in the search business. As more people use your search product, your search results get a little bit better. Google then added a bunch of other products like mail, like cloud services, that was able to then pull in more and more data to improve those search results. And importantly, tie ads that businesses are paying for to the things that you're searching for. That's really how the company monetizes its business. And that business has been largely unencumbered over the last really 10 or 20 years, even though a bunch of other companies like Yahoo and Microsoft have really tried to crack into that business. This could be an opportunity for them to do that. So what they're saying here is that they're going to provide better search, complete answers, a new chat experience. This could be an interesting new way to search. So instead of attacking Google on a straight up front where you're just doing another search engine just on a different website, maybe a chat feature would be something that would be more usable as you kind of start in one place and then have AI help you segment down to exactly the answer that you're looking for. And I think the thing here for Microsoft is they're really integrating this product into a lot of the other pieces of the business that they own. I mentioned Edge, but this is somebody doing a LinkedIn post. LinkedIn, you might remember, is a Microsoft business. So this is using artificial intelligence to create engaging content for something like LinkedIn. That is all happening on Microsoft's products like Bing, like The Office, like LinkedIn, and in the Edge browser. And that could potentially be competition for Google and Alphabet. I don't think this disruption should be completely blown off by investors. And there is a reason that the stock is reacting. But we also need to think about how people are actually going to change their habits as a product like this is introduced. Bing has been around for a really long time and has simply never gained traction because Google is so easy to use. It's built into web browsers. It's probably the first thing that pops up on your internet browser, on your computer, or on your phone when you open it up. It's just simply everywhere. And advertisers know that as well. That's why money has flown to Google's search products, because they know it's a really effective way to reach people. So that's not something that's going to be easily broken. I would highlight a company like AOL as an example. This was much earlier in the days of the internet, but AOL was the dominant platform for most of us getting on the internet in the 1990s. And that's a company that's still around. It's not doing the same thing that it was 20 years ago, but these businesses, Google included, do not get disrupted overnight, and especially at the scale that a company like Google operates. This is even beyond the fact that Google announced its own AI-powered product called Bard. We need to improve that name, Google. And that will likely be proliferating in things like Google search. So some of the features that Microsoft is including in Bing may start to show up in a product like email or any of the other Google products you use, like YouTube, where I'm posting this video right now. The technology business that we have today is very sticky. Yes, competition is only a click away, but once you get used to going to Google for a lot of these products and you get comfortable with it, it's very hard to make the switch to a new product like Bing. So is this competition? Yes, of course. But it's incremental competition. I don't think this is disruptive competition. And let's look at the numbers behind this. Here you can see some of the breakout data from Alphabet's most recent quarterly report. Google search and other is clearly the biggest piece of their business, $42.6 billion, but you can see that number has actually come down slightly over the past year. So a lot of that has to do with both advertising spending and then the impact of Apple's ATT, or app tracking transparency, which makes it more difficult to track if people actually convert on an advertisement. But this isn't the only piece of the business. Alphabet generated $76 billion in revenue last year. And while a little over half of that is Google search, there are some other major businesses. YouTube ads, the Google network, so that is the company serving ads all over the internet. The cloud is a booming business for Google. And then, of course, there are other bets. So other products that they're working on, like Waymo, self-driving vehicles, and all kinds of other smaller businesses that they're funding. If we move down to operating income, these services businesses are clearly the driver of Google's operating income, or Alphabet's operating income. So that is where the money comes from. But this is not a business that's going to dry up overnight. And it's not a company that's going to lose a huge amount of money overnight either. Microsoft CEO Satya Nadella actually talked about this. They don't necessarily need to take 50% market share in search. If they can go from 5% market share to 10 or 15% market share, that would be a huge win for Microsoft. Now, losing that business for Alphabet and for Google would be a negative for the company, but we're getting the stock for 7 or 8% less today than it was trading for yesterday. That's not including any of the growth that we're going to have from all of these other businesses, from products like YouTube and the cloud in the future. So I think there's a lot of pessimism priced into the market right now because of this AI announcement for Microsoft. I do think this product is going to be really compelling, but it isn't as if Google is just going to take this laying down. They're going to introduce their own AI products, which, if the reporting is accurate, is a very powerful AI tool. We don't know how it'll monetize yet. We don't know what the product will look like for people who are actually using it, whether it will be integrated in the same way as something like Microsoft can do with OpenAI on its products. But Google is absolutely going to respond, and I don't think this is a business that is going to be decimated. As a result, shares trading at about 21 times earnings. This is a great value for one of the best businesses in the world today. I think the market's overreaction has become a buying opportunity. This is a stock that I'm going to look to add more to my portfolio over the next couple of weeks, because if this AI hype cycle gives investors a discount, I think that's going to be a great buying opportunity long term. Artificial intelligence is not going to be a winner-take-all business. Microsoft is not going to take all of Alphabet's search business either, and I think that's something investors need to keep in mind. What do you think about Alphabet's potential, their reaction in the artificial intelligence space? I'd be interested in your comments in the comments section below. Give this video a like, and of course, follow Riiv Investing. I really appreciate it. Thanks for watching, and I'll see you here next time.